the insurance industry is undergoing a profound transformation driven by insurtech. Gain valuable insights as we delve deeper into the impact of artificial intelligence, AI, data analytics, blockchain, and other cutting-edge technologies on insurance offerings. Discover how these advancements are reshaping insurance products, pricing, and accessibility, ultimately altering the way individuals and businesses protect their assets and manage risk. Kindly join us in welcoming Mr. Shreyas Patel, CEO at Bima Leo.
Hi, good morning, everyone. My name is Mr. Patel, and I'm the CEO of Bima Leo here in Kenya. Once again, good morning from a very rainy Nairobi, and thank you for all our visitors and audience coming out from Nairobi throughout Africa as well. So today we're going to be actually talking about how insurtech has actually impacted the insurance industry and how AI and all those funny or great acronyms which are actually coming into the market has impacted the industry, and how we as Bima Leo have actually really made a serious impact in terms of changing the policies and changing the practices is what's happening in the industry here in Kenya. Now, let me start by actually giving you some sort of idea of exactly what our strategic vision is. We see that insurance in Kenya and across Africa, really, I mean, we're basically facing a change, a digital transformation in that industry. And I think the need is there because if we look at general insurance, those are the two largest loss-making sectors of insurance. Us in Bima Leo actually focuses on motor insurance. And why motor insurance? Because that's one of the loss-making sectors of the general insurance book for that industry itself. Now, what we do here in Bima Leo is basically offer personalized insurance by offering customers the chance to pay for usage on motor insurance rather than buying full year insurance policies. Now, when I say usage, I say, look, why buy insurance for the year when you're not using your vehicle? Why buy insurance when you have numerous vehicles on your fleet and half of those vehicles are actually not being used? So buy when you use. And when I say buy when you use, we have policies which you can actually buy for the day, for the week, or you can buy package-based insurance policies which are focused on kilometers rather than actual full year. Now, we all know economic times here in Kenya are pretty hard. Fuel prices are going up, taxes are going up, etc. So just recently, I don't know if everyone saw, there was actually an article in Business Daily which actually said that, fuel usage over the past 5 years over the past 5 months has gone down intensely, incredibly low because of the high prices of fuel. And why would we want to actually pay full year premiums when we're not using our vehicles? So therefore, what we've done using insurtech, using technology, is to allow customers to get online and actually purchase insurance policies for their private, commercial, and agricultural assets on the use. We work with numerous underwriters to actually create different policies around this. And really, at the same time, we kind of actually see, all our underwriters have certain target markets we actually bring to them and therefore create new policies around that. That in turn actually changes the customer experience. Insurtech and the advent of insurtech here in Kenya and across Africa has been a fantastic movement, because initially what was happening was basically we would need to actually go to our brokers or your agents and then fill out these forms, these proposal forms, and then the proposal form then goes down to an underwriter. The underwriter then actually issues the policies, and then it's actually posted to you. And then suddenly a Boda showed up, and then we were getting riders actually sending these policies to your doorstep. Now we can actually go online, put in our details, fill out these forms online, and then basically get a price comparison on exactly what would be the right policy for you as a private user or a commercial user or an agriculture user. What step further what we're seeing is basically that you can now personalize it. When I say personalize is as I began this presentation, we're thinking about actually, hey, I don't use my vehicle. I want to only use it for me going up from here to Nakuru or Nanyuki or certain mileages. I only want to pay for that insurance for that period of time. And that's how we actually created personalized insurance policies around it. Now, the technology we kind of use around that is using cloud-based technology where we would use algorithms, AI, to actually look at what the best policy for you as your needs are, as in what your kilometers are going to be used for, and then find the best pricing for you. And when I find the best pricing for you, you then basically say, yes, I accept. And on that basis, you go ahead, pay, and your policy is then emailed to you. Off you go. You're fully covered. Now, how simple would that be? Or is that compared to you then going out and actually purchasing full year policies? Now, we all say, okay, full year policies are great because at the end of the day, you're getting a full year policy. You don't really have to worry about actually getting online and actually purchasing these policies when you want to use them. But think about the savings. We all think about actually how much money we're going to put in our pocket rather than we're giving someone else that money that we'll never see again. So ultimately what we're saying is that insurtech and what we at Bima Leo do is trying to actually give you a chance to actually get better policies and better ways of actually saving money on motor insurance. Now, why in motor insurance? Why can't we actually do it in other sectors? We actually are doing it in other sectors. We actually, still sticking to the motor insurance sector, in private, we offer, pay per use and pay per kilometer, but in commercial, if you're a fleet owner, my background has been in telematics for the past 15 years. We know exactly how vehicles are used on the road here. We know exactly how they're being used on the commercial sector, how goods are being transported, and how transparency is provided, to the fleet owner and the fleet operator, and therefore we know that there is many corporates out there who actually have fleet management software which are installed in their vehicles. Now, history has shown that generally what happens is the fleet operator just wants to see, has his goods left the go down? When is it actually getting there? And has the driver actually veered off any routes, etc.? But what else can we do with this? And that's where insurance really comes into it. And that's where we look at UBI, usage-based insurance. We have products out there which allow for customers who have large fleets to reduce premiums based around usage of their vehicle. Now, you would say, hey, listen, why can't we do this in private sectors? Why can't I have a usage-based insurance policy which actually works with the private vehicle I use? But do we really want our insurance providers to look at where we're going? No, I don't want my insurer to know where I've gone in the evening or where I've gone in the weekend. And then the policy premiums have subjective rates. So we don't apply that to the private sector. What we do on the commercial sector is basically sit with commercial corporate fleet owners and say, look, your fleets are out there on the road. Let's see how many routes they take. What are their usage? Do we agree on the usages on how many routes they take and what usage platforms they go for and the routes? And then we come up with a rate, which is far better than what they're getting at the moment. There's an advantage to that. Now, instead of getting a blanket policy for the year, you'd rather get one for usage. And there, based around what the fleet driver is doing, you as a fleet owner can actually now assess how good that driver is and coax him into actually doing more safe driving, and encourage safe driving for the roads here. In agriculture, we do various different other things. We have partners who actually work very closely with the farmers, tractor owners, etc. And we have usage-based insurance for tractor owners. Owners who actually may rent the tractors to someone else and therefore would like to actually pass on the insurance policies to them. And that then allows the tractor owner to actually save on insurance and perhaps use that money for buying seeds or buying other implements which are actually well needed for the farming sector. So we would really look at that as a really growth market in the insurtech space. Personally, I feel, being in the tech sector and understanding how IoT works and sensor-based solutions work in this market, I think there is a lot of opportunity in terms of how the health sector can actually leverage insurtech to actually improve on services and also improve on premiums and claims. Now, let me sit on what I'm thinking about in terms of claims. We're talking about, say, for example, a lot of people I see nowadays actually having wearables. You've got your Apple Watch. That gives you statistics about health, your ECG, and how many steps you're doing, and information which can then be relayed back to your doctor. And if that information is actually relayed to your doctor, the doctor can actually then say, "Hey, listen, I think we've seen a murmur or a change in your heartbeat, and I think you need to come in to actually get some checks in." Now, as an insurer who's actually got health insurance policies with you, it gives the information and a sense of, reducing your risk in terms of how that policy is written. Now, if that information is then certainly sent out to the right health providers who can monitor exactly what your health status is, then ultimately your policy will change. You're then looking after yourself. The insurer knows that you're looking after yourself, and therefore your premiums can change accordingly. And I think there's a large advantage of that coming into this market here in Kenya. We see a lot of outpatient, clinics coming up, and I think linking into those sectors has a great potential of what's to come. We know that it's happening in the Western world. We know it's happening in the States. It's happening in Europe. But why isn't it happening here in Kenya? And why isn't it happening across Africa? So those are the other things where I think we have an advantage of actually leveraging insurtech and how tech and IoT and sensor-based information can actually be used to improve insurance policies and delivery. Now, we all talk about, when I looked at the actual script and we looked at exactly what areas we want to talk about, we talk about AI. This big thing about everyone talking about AI and, generative AI, etc., and how that's going to make a huge impact in terms of the insurtech sector and the insurance sector here in Kenya. I think, AI is a great thing. I mean, it has evolved since it suddenly came into the market and exploded, but if you look at market reaction towards AI and what it's doing for the insurance sector, I think a lot of it's actually based around chatbots, customer experience. You want to talk to someone who you have a claim to actually process, or you haven't got any of your policies sent out, or you need to actually talk about what your definitions of policies are. A chatbot based around generative AI is actually pretty good. I think that's where it really comes into play, and I think over time it'll get more intuitive, and we'll see a lot more information coming out from it. We know that ChatGPT is now linked into the internet, so how that then transfers into new neurons and how it actually now portrays itself out into the market is a different world. So we'll have to keep an eye out on what happens in that sector. But what's really interesting, and actually I find that very exciting, is that AI and claims has been a very fascinating process, especially in the motor industry. Now, when you have an accident, the ideal process is that instead of having to go through a police abstract, getting the police to look at what the accident occurrence is, to really see, is it your fault, is it someone else's fault, etc., we're looking at using AI for claims processing. Now, when I say AI for claims processing, is you take a photo. The photo then actually on your phone basically uses AI to actually see how severe that accident is. That information is so crucial for an underwriter, because that information can then allow an underwriter to process claims far more quicker than what it is right now. I've seen processing of claims, on a general, without using these technologies, take at least between, say, if you're lucky and you can get the parts for a replacement, anything between 15 days or 20 days to 2 months. And that is a real big issue. What we're looking at is right now the underwriters are having a huge issue in terms of how they process claims. Claims have to go through valuers and assessors and then find a way to actually get the parts to replace. And at that same time, the customer is actually now thinking, when am I going to get my car? how do I get back onto the road? How do I actually now earn money from my car rather than, sitting around for my car to be actually repaired and get it back to me? Now, using AI and claims processing can actually help that because it then unfortunately cuts down the supply chain and the value chain of people who can actually then, use their time for other beneficial areas. So what I'm saying is basically you take a photo, it then actually assesses how bad the accident is. From that, basically that information goes out to the claims department and the underwriter, and then the underwriter basically then says, okay, fine, I authorize these parts. And then effectively that is when the parts are then changed with an authorized sales or a service center, and off you go. Hopefully you can get that done. And we've seen it in the Western world. You can get cars out in 3 or 4 days, depending on basically having the parts in hand. Now, parts is a big issue right now here in Kenya. We all know our, devaluation of the currency. We've devalued our currency by around about 20 to 30%. And ultimately what's happening is basically there's a real need for us to actually source better parts in this market. And unfortunately, the cost of parts have gone up. So cost of actually repairs have gone up, etc. But the problem is, if we're going to use technology and then integrate it into insurtech as a platform, we would also look at how blockchain comes into play. I think blockchain within parts supplies has a great potential, and I think from that respect, we need organizations, government organizations to actually play a part in this. Because ultimately what we want is basically to be able to source parts more efficiently, and through an open ledger, as what blockchain allows us to do, we should be able to source those parts very quickly and find a way to actually get them to our service station so that we can get our cars back on the road. InsurTech allows us to do that because then it's linked into the insurance platform, it's linked into the underwriter, and it's also linked into the government bodies who allow us to actually give transparency of those parts. That is a great opportunity where I see AI, and blockchain and those other areas come into play. But now we're all thinking, well, this is great, and what are we going to do with all this information? Who's going to take that information? Data protection, cybersecurity. Yeah, that's a real issue. And ultimately what happens is, from our point of view and what we do in Bima Leo is we ensure data protection is one of our key pillars of our services. What we do is basically, if you come on board with us, you buy a policy, we encourage someone to actually put a telematics unit in it, in your vehicle, so that effectively, if there is an accident, we can actually process claims far more efficiently, as what I explained earlier on. The issue here is customers say, hey, listen, but now you've got a telematics unit, you've got a tracking device. Are you going to be able to actually see where I go during the day? No, we don't. Data protection is a big thing for us. And I think data protection within the insurtech sector is actually a very, very key area of focus. Because what we say is, no, we don't look at any of that information. All we do is we say, look, you give us that opportunity to actually look at data when you have an accident. And when I say data, we look at basically what happened, say 5 to 10 minutes before the accident, to the leading up to the accident, and the impact factors during the accident. So that means, the G-force factors which actually hit your vehicle, etc. Now, that's the only information we look at, because that's going to help you get your car back on the road. So what we look at is data protection is a big thing. And I think, I look at other insurtech platforms here. They also say data protection is a big thing. And it is a big a feature in what is offered within the insurtech sector. The other thing is cybersecurity. We also, what happened a couple of months back when, our government agencies basically went down because it was hacked. And that information, this protection of information is also very, very key for us. Now, cloud-based services where a lot of our information sits is heavily protected against cybersecurity. Nothing's fully protected. We all know that. But we have to make sure we take steps to have the right protection for avoidance of hacking or any of that information. But look, now the information we take when we actually do motor insurance, etc., is really your logbook and you know your some of the actual KYC information, such as your KR pin. Those things are very crucial for us to actually keep in hand and protect. And I think, you know, there are many different organizations out there which are coming in to allow you to put those layers in when you're actually creating an insurtech platform to sort of improve on the cybersecurity aspects of it. So, you know, really, I mean, I think there is a lot which can be done within the sector, and from our point of view, we're very excited to really change the way people are purchasing motor insurance here in this country. It's well needed. You know, I think, you know, our biggest challenge, I think, you know, giving you a bit of an insight is trying to hook up our platform to the underwriters' back-end systems. That has been a real, journey, so to speak, and a learning journey, really, because we actually understood exactly how far back the underwriters have been and how long they would take to actually get to where we are as an insurtech platform. Remember, we're not an underwriter. We sit in the middle. We're a marketplace as Bima Leo. What we do is basically we connect to the underwriters and then various different other channel partners, and at the same time then offer all these unique policies out there into the market. Now, we have an advantage because we understand how to use tech, to leverage tech, to actually link up with the underwriters, etc. So we created our platform around it to have open APIs, to allow other channel partners to come up with value additions, etc., onto our platform, etc. But when we go out to the underwriters and we say, hey, listen, you know, we want to have a seamless process. What we want to do is basically say, hey, listen, a customer actually puts in their information, and within 2 or 3 minutes, they got a policy. That information is then bang onto the underwriters' back-end systems. It's into their accounting processes. We're then good to go. When we started our journey to actually create this platform, this marketplace, we were really surprised to find out that the underwriters were way behind on schedule. They've got this whole drive to move to IFRS 17, which is an accounting package. It's a financial package which they need to actually go into. And ultimately what they were trying to do is basically have their back-end systems get to that process where we can actually get our systems to talk to their systems. And that has been a challenge. And I think, you know, we're getting there. It's a learning curve for us, and it's also a learning curve for the underwriters. But at the same time, I have a lot of good hope that it will happen, you know, in the coming months. We've already done it with a couple of underwriters, but it'll be nice to actually see that most of the underwriters who are forward-thinking, because we also have underwriters here in this market who aren't forward-thinking. They're happy to be where they are. They're happy to, you know, not move anywhere they want, and happy to actually work with their books, etc. But the ones who are actually forward-thinking are really keen on actually changing that process and really, you know, able to actually give us that link and give the other insurtech platforms providing various other value additions and value propositions to seamlessly link into this. So, you know, we have good hope in that respect. I think the other thing which we also really hope and challenge is that, you know, I think from my perspective, if I look at the way the motor industry is actually structured here in this country and how the government policies are actually structured around it, you know, I take an example with what happened in the tracking industry. You know, we started with tracking vehicles, you know, to then suddenly having these digital speed governors come in. And then now we're on digital speed governor version, I don't know what. I mean, the version 6 or version 7, or I don't know what. Yeah. So that really has to change. If we're going to have areas of traceability for the insurance industry to actually provide better services, provide better risk ratios, etc., and better premiums, then we need to actually sit around a table and be able to actually say, hey, listen, stop creating these new versions. Stop creating barriers for fleet owners and private vehicle users to actually get out on the road and actually benefit from technology rather than imposing new policies and imposing new technology. So that's something which I hope, you know, over time we'll be able to see. Because say, for example, if a fleet owner actually has a tracking unit, has then got to get a digital speed governor onto it. Those are two costs. And then also looks at how much the insurance policy is going to cost him. And then here I am trying to say, hey, listen, by the way, we're going to use this technology to actually now give you better policy premiums, etc. By then the customer is thinking, I've got too much on my plate to really even think of all these issues. So we need to have a unified policy which actually allows us to have better integrated systems in vehicles, etc., for then us to actually provide better services and better premiums and better policies out there in the market. So those are kind of big challenges we see coming through. Now, I can say, look, we would we want to go into other sectors, etc. I think, yes, we do want to look at other sectors. I mean, our model, as I mentioned earlier on, is pay per use. Yeah, insurance should be pay per use. It should be when you're using it, you should be able to get into the vehicle and actually now switch it on, and the insurance policy kicks in, right? The exciting areas which I see coming into this market, it's a big buzz at the moment, as you've all seen, is EV. We're all getting these EV buses, we're getting these EV boaters, and soon, hopefully, and I truly hope that we're not going to get these EV scooters, which I see in the Western world, because, health insurance policies would go up for that. But right now, what we're seeing is this bus and a drive for boaters. It's a great thing. From our perspective, you would notice if you go onto our site, bimaleo.com, is basically, we don't offer boaters. I'd love to offer boaters, but why don't we offer boaters as a cover? Because it's a cover which is high risk. Good. There are great companies out there, who are offering insurance covers for personal accident on boaters, but actual asset cover is a very limited sector in terms of underwriters actually offering those books or covers. Now, having the advent of EV come in has shown good promise, because ultimately with an EV boater, you don't have to actually go very fast. You can actually limit the speed, which God knows we need that. You go out on the road and all these guys are on a death trap as I see it. But that then limits it. Then at the end of the day, if you're looking at the battery life of these EVs on a boater, you've got about say for example, I'll give you a hypothetical. You've got about 50 to 100 kilometers. You know that it's going to do 100 kilometers. Then on top of that, basically you do battery swaps, etc. So the risk for an insurer goes down. Because if you look at a motorized motorboater, which basically is running on fossil fuels, the cost of fuel has gone up, so that's a high expense for him. Then at the same time, there's no limitation on speed, because how do you limit it? We tried to limit it when we were doing telematics on boaters, but there was a big challenge because you can mess around with the hardwired units, and at the same time, when you mess around with the hardwired units, you're messing around with the actual warranty of the bike, so that's a big issue. And at the same time, what happens then is basically, we don't have any assurances that boater rider has actually got the right training, or whether he's going to be actually good on the road, etc. High risk. So then underwriter says, well, actually, we don't want to touch that area. There are a few, of course, which, with 4 million odd plus boaters out there are insurers who want to insure that asset. But EV then makes it much more exciting, because what we then do is basically look at how we can embed insurance policies around usage, knowing that boater goes at 50 kilometers an hour and knows where it's going, etc. And those are exciting areas where we find there are going to be an amazing change for us going forward. Then, of course, buses. We see a lot of opportunity in those areas, but EV buses are a different area. I mean, I think there's not much you could do for full year, except full year policies, but maybe for passengers, etc. So those are exciting areas which are coming through. I think generally, I think also we're in a connected space. There is you're in a connected home. Your washing machine is connected. Your fridge is connected. Your house is connected. You're full of CCTVs, etc. And you live in an apartment. It's all connected because you've got CCTVs, etc., which are there. And then when you get into your car, you've got a connected car, as I mentioned earlier on, and you've got the telematics solutions, and at the same time you've got traceability of how you can actually get into your car and then you get into your home. There is great opportunities for insurance policies to be actually allowed in that sector, and that's where insurtech actually comes into play. Yeah. Imagine sensors can tell you when you're actually giving, when you have a leak, right? And if you've got those sensors in place in your house, then your insurance policy for home insurance is going to go down. And those are things which are actually have a real impact going forward. Of course, I spoke about the car, but then the connected office is pretty much the same. You can actually see what your workers are doing. You can actually monitor where your workers are going. And your Viva, your insurance policies on that respect can actually have a huge difference. So with that, I sincerely hope it gives you an idea exactly how insurtech and has leveraged technology, how we at Bima Leo have actually created policies around using technology for the motor user, on a pay-per use and pay-per-kilometer and usage-based insurance policies. And hopefully you got a chance to actually understand where the future is going with the underwriters and governments and actually with technology. With that, I thank you very much for your time and hope you have a great day. Thank you.